And for the overall market, what do you think about the valuation levels, and is a correction coming?
Well, I think that this is the correction that's been waited for the most of any correction that ever possibly happened. And it's almost like that anticipation makes it makes it possible that it takes longer for it to happen, which certainly has been the case. I think central banks are still expanding their balance sheets, the Fed notwithstanding. I mean, we're supposed to start rolling off balance sheet in October. We'll see how that goes. We'll see how fast that eventually becomes. And the US is raising rates, so arguably the Fed is less accommodative than it was. But actual ease of getting money is easier now than when they started raising rates. So as long as central banks are still expanding balance sheets, I think equity markets can continue to perform because you don't have a lot of other alternatives. You can't go into fixed income because you've got very low rates across the world and in some cases negative. So I think that equities become that default place where people continue to go. So even though it looks like from a historic standpoint that valuations look a little high, if the economic backdrop is getting better and central banks are continuing to support their balance sheets, then I think that those things can be a driver for equity prices.
And how important is tax reform to the stock market? If it happens, what will happen? What will be most effective?
I think 6 months ago, the idea was if you didn't get tax reform, the market was going to react very badly. And now it seems that the sentiment has shifted to when we get tax reform and we will get something, the market is then going to use that as a positive catalyst. And I think that that's been a sentiment change that's happened over the last 6 months. I think obviously there will be some things that are going to change in the tax code if they can get a bill through. That's going to be positive for equities because if the corporate tax rate comes down, that's going to be a benefit to earnings, which means companies have more cash, which means that they can do more things with that cash. So I think that is going to be positive for markets. If you don't get it, I think that there will always be the promise that it could come in the next session. Right now it's not like an either or like it seemed like it was with healthcare, which is now it seems like that change is not going to happen. I think that with taxes, even if you don't get it as soon as people want it, they're still going to continue to anticipate it, and so that can be looked at as a potential positive catalyst.